Hi, Thomson here. Just had a great conversation with a London startup who are building online communities along with offline events, so really niche, curated, interesting events. And we got talking about their angel investors and their kind of upcoming investment rounds, so looking at venture capital, those sorts of things, because they're a pretty interesting and successful company. So they probably raised the money from angels, investors and VCs, and to be honest, they probably bootstrap as well. But we got talking about equity crowdfunding. So we talked a little bit about equity crowdfunding, and the founder that I was meeting with said, well, look, we could probably get the money from these other sources of investment, so why would we want the crowd? Why would 100 investors be better than one investor? And I think there are three reasons. So the first reason is to do with the product. So if you have 100 investors, those people are going to be very dedicated and very loyal to loving the product. So they will probably buy your product. They'll be the early kind of paying customers. They'll also then talk about the product. So they become your brand advocates. So talking about the business, talking about the brand. And then secondly, there's the company itself and the network and the community. So having 100 people out there that have your best interests at heart and have a vested interest in you succeeding, they'll be the ones that make introductions, they'll be the ones that help you grow and develop. It's not just the network of 100 people that you're immediately connected with, it's everyone else that they're connected with. So the real value in that network comes not just from the investors themselves, but from everyone else that they're connected to. And that's why you want investors who are specifically interesting to you because of either their expertise or their industry or their kind of purchasing behavior or the communities that they're a part of. So that's why you're looking for people that are influential, not just in terms of the money that they can contribute, but also their resources and expertise. There's a benefit to having 100 investors who can buy the product and talk about product. There's a benefit to having 100 investors who can talk about the company and talk about you and provide you with introductions and networks and help you be successful. And then the third reason is around expertise. So you can actually reach out directly to your investors for advice, for information, for expertise, or you can use their network again, but this time on resource. Having 100 people actually at your disposal to help and provide you with resources. So some of those resources are going to be expertise and knowledge and information. Some of them are going to be like practical, they may be able to make additional investments, so further funding. Some of them are going to be kind of non-financial, so contributions and of equipment or office space and other kind of non-financial contributions. Because each investor wants to see you succeed, both kind of emotionally because they've backed the company, but also financially because they want to get a return. They want to see, and I think that's the trick, is it's not just kind of the mercenary kind of we want our money side of things. It's also that it's very rewarding for someone to feel like they can make a difference to their investment. Because if you invest into a public company, so if I buy shares in Apple, for example, I mean, I can buy an iPhone and I can talk about Apple and I can go and, in fact, I could even go and visit the stores and come up with some feedback and some suggestions and email them off to the kind of Apple team. But there's not really a lot that I can do to influence the success of that investment. But with a startup, there's a lot that an investor can do that will make a difference. You know, you can buy the product, you can provide introductions and networks and be part of the community, and you can provide resources, you know, whether it's your own expertise or connections and access to other resources. So there is a lot of things that you can do to influence the success of the investment that you've made, and that feels rewarding. So we've seen that investors who have invested a couple of £100 can be just as committed to providing like really amazing support to a company, just as much as someone that's invested hundreds of thousands of pounds, you know, because often those investors are very time poor. So you may actually find that depending on what you want from your community, you may actually be better off having 100 investors than one.